Hello everyone, welcome to Falcon Stocographics. So today, the company under discussion is a paper manufacturing company. It was incorporated in the year of 1960 in the month of July. Its production was more than 5 lakh tons per annum in the financial year of 2018-19. It is the largest producer of branded paper and also it is a leading player in India as well as in export from India. It exports to more than 60 countries around the world. And hence the company under discussion is JK Papers Ltd. Now the products of JK Papers include office papers, packaging boards, printing and writing papers and specialty papers, in which JK Easy Copier, Sparkle and Ledger are the most common brands, or we can say that it is the most common brand which we see in day-to-day lives. The current market price of the stock is 216.40. Its market capitalization is more than 3,600 crores. Its 52-week high is 284.9 while low is 90.45. As you can see over here, just about 1.5 years ago, the stock was trading at 80 to 90 to 100 rupees, and now the price of the stock is at 216.4 rupees. Shareholding pattern of the company: promoter hold about 49.52% stake, while FIIs, that is foreign institutional investment, held about 4.59% stake in JK Papers Limited. Now let's do a standalone analysis of stock of JK Papers Limited. Shareholders funds and debt over the years. Now as we can see, this is the capital structure of JK Papers Limited. In the 2011-12, the equity or the shareholders fund was 851.46 crore rupees, while the debt or long-term debt was 845.56 crores. And as we can see, the debt has increased to 1903.85 crores, and the share capital or shareholders funds have increased to 2600.22 crores. Now, shareholders' funds have increased 3 times while debt is approximately 2 times. In the first year, that is in 2011-12, the debt to equity ratio was about 50%, and throughout the years, like for 8 to 10 years, it has remained almost the same, like 40 to 50% belong to debt. In 2020-21, the proportion of debt or the amount of debt have increased by 900 crores. It is because of capital expenditure and acquisitions being done by the company, and the acquisitions is helping company to move ahead and to get more competitive. Now annual revenues of the company here. In the year of 2011-12, annual revenues from operations was 1330.06 crores, while in 2020-21 it was 2741.6 crores. In the year 2018-19, the revenues peaked at 3256.3 crores. Now we can say here that in the year 2019 to 2021, it was a COVID period. Hence, all the businesses have got hit, and the decrease in revenues can be attributed towards COVID. Now, here profit before tax of the company. In the year of 2011-12, the profit before tax of the company was 52.12 crores. In 2013-14, it got into losses of 122.94 crores. Then again, in 2015-16, it came to profit, and the profit peaked to 718.59 crores in the year 2019-20, and then again profits decreased to 453.42 crores in 2020-21. Again, because of the COVID, the sales got affected, all the businesses got affected, and also the profit before tax of the company also got affected. Now, the quarterly revenues from operations of West Coast Paper Limited, as we can see here, The entire period of 2020-21 have gone into COVID, but still we can see that there is a steady growth in revenues of JK Paper Limited. In September 2020 quarterly revenue was 638 crores, while in September 21, quarterly revenue was about 944 crores. In the same way, EBIT, there is a steady increase in the EBIT of, as we can see here, there is a steady growth in quarterly revenues from operations of JK Papers Limited. It was 638 crores in September 2020 and grew to 944 crores in September 2021. It is a very good thing as a majority of this period went into lockdown and still company managed to increase its quarterly revenues over the period of time. Now when it comes to EBIT, it was 92 crores in September 2020 and increased to 210 crores in September 2021. Again, much of the time in this financial year went into lockdown, and still company managed to increase its EBIT. It would have been a big deal even if the company would have maintained its profitability. But in this period also, in this difficult time, company is showing not only a profit but also an increase in earnings before interest and tax. Many of the companies have got into losses, but still this company managed to stay in profit, which is a very good thing and it is a sign of strength. Now quarterly net profit of the company, now as there is EBIT, so naturally net profit will also be there. It was 33 crores in June 2020 and increased to 114 crores in June 2021. Again, the here the net profit increased by more than three times, which is a very good thing, and it shows again that the company has good amount of strength. And even in lockdown period, or even when the businesses or the operations are not in full swing, still company managed to keep its EBIT and its net profit, which shows that company has good potential to grow and a good potential to stay in profitability. Now, return on capital employed of the company in March 2017 it was 6.18%. In March 2019 it peaked at 21.46%, and then in March 2021 it was 9.22%. Now, the maintaining of profitability is itself a big thing when it comes to this company, and as we can see over here, the return on capital employed was has increased. It stayed flat in the year 2019 to March 2020, and then it decreased as there was as much period was had gone into lockdown due to COVID, and still company managed to have a return on capital employed of 9.22%. Now, when it comes to debt to equity ratio, company is in huge debt. It was 1.08, decreased to 0.64 in March 2019, and again it was 1.02 in March 2021. Now here we can see that debt to equity ratio is quite high. But the thing is, company took out loans for capital expenditure and for acquisitions. Now this thing indicates that company is quite confident in its business, and it has forecasted growth for its business in the times to come. Now earnings per share of JK Papers Limited, it was 11.39 in 2016-17 and it was 13.73 in 2020-21. As we can see over here, it was about two times, it has increased to two times in the year 2016-17 to 2019-20, and then it decreased to 13.73 in the year 2020-21. So hence here we can see that company has good potential to grow in the years to come, and the decrease in EPS in the last year can only be attributed due to lockdown. Now the technical of the company, as we can see over here, before 1 year or 1.5 year, the company was trading at 80 rupees, 90 rupees, 100 rupees. It has consolidated over here for a large amount of time, and all of a sudden the company had shown growth in its price, and it touched to more than 280 rupees, and now the price is 216.4 rupees. As we can see over here, the price of the stock is below 20-day moving average and 50-day moving average. Black line is 20-day moving average and blue line is 50-day moving average. It has crossed 50-day moving average as well as 20-day moving average. Now the 200-day moving average, which is at 193, which will act as a strong support. Over there, purchase can be made. The stocks can be bought at that level, or one should wait for the stock to cross 20-day moving average and then 50-day moving average, so that the strength in the stock can be indicated, and then entry can be made. When it comes to Fibonacci ratio, 0.236, the stock has crossed the level of 236 from upside. 236 is at 243.69. Now the stock is at the level of 382, 213.39. If the stock crosses this line also, then the buying level will come below 190, that is 188.88 rupees. Now till the time the stock shows some consolidation or shows a strong support at any of this level, entry should not be made. And also it depends upon the market trend. So one should look out for market trend as well as the consolidation and strength of the stock at each levels, whether the stock will break down or it will go up. In the technical indicators of the company, 15 say that the stock is bearish, 9 say that it is the stock is neutral, and only 3 indicators say that it is bullish. So hence here we can say that the strength of the stock is very weak. The company is very much self-sufficient when it comes to raw material requirement. Under Social Forestry and Captive Plantation Initiative, it has planted trees at 200 kilometers radius around it. Hence, it is very much self-reliant when it comes to raw material requirement. And more than 50% of the raw material of the company comes from its own source. So whenever the raw material prices fluctuate in the outside market, it generally doesn't affect the company, and it is able to control its cost, raw material cost. And it is also a leading player in the sector, in the sense that its brand presence is quite good. Hence, in the future, it could lead uh, lead the paper sector in India. The company has high amount of debt. High amount of debt means the company has to pay a good amount of interest. Now, even if the company has to pay a good amount of interest, still the company has maintained its profitability. So here we can say that the company has a good strength, has good confidence in itself, and in the long term, maybe this company or this stock will prove to be a multi-bagger stock. And if you want to trade in the short term, then it has to be done carefully. When it comes to investing decision in this company, one must invest in the stock only after this stock shows strength again. And if this stock doesn't show any strength, then please do not invest in it. It should cross either 20-day moving average or 50-day moving average to regain its strength, or it should bounce back from 200 moving average. And also for long-term investing, one must also keep checking its books of accounts, that is profit and loss account and balance sheet. Now in the end, thanks for watching the video. Please like the video and subscribe to the channel. Thank you and take care.